Shock Top, he said, was in there, but no Blue Moon. Boy, but pretty much everything else, huh? I gotta. Oh man, gonna be buying local now, man. You do like Charlie does and be a homebrew guy. But they don't own Coors. That was the one that seemed like everybody was going for. Yikes! What a weird life. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Everybody's good? Hey, Eric, your client won the Closing Beat, man.
Guess the Dow.
Should we just, or guess the Dow? Let's just go over there while Coda's here. Our winner for Guess the Dow, Jonathan M.
Yeah, that's it. Yeah. So he won $100. His account's going to be credited $100.
He took the credit. He knew better. To the Roth IRA, right?
I believe so.
Yeah, that's the way to do it. Congratulations, Jonathan, on winning Guess the Dow. You were the closest without going over, and smartly have decided to have your Roth IRA credited. Those of you that are playing the game, remember, if you have an account here with us and you win, you can have your account credited. Choose the Roth, right? If you have multiple accounts with us, choose the Roth because it doesn't count towards your contributions. And that's $100 that gets to grow tax-free without you having to put the dough in there. So very, very cool. Congratulations to Jonathan there. How the rest of you doing today? Good. Did you spot it? Are you seeing the sector rotation a little bit? I went out of my way, we're going to do this today, I went out of my way to try to highlight how to see sector rotation because it's starting, and yeah, it could be a false alarm, but right now it's starting. It looks like it's starting to make that shift there. So we're going to talk about that here today, along with so many other things. Remember, if you want to play Guess the Dow, jazzwealth.com/Guess the Dow. You don't have to be a client to play, but if you are, you can win a gift card or the contribution to your account. Also, Wine and Wealth this week. Wine and Wealth this week. Wine and Wealth this week. There we go. We're going to focus on a deep dive between the digital dollar and the Fed Now. So went into the nuts and bolts of how the Fed Now is going to work, went into the nuts and bolts of how the CBDC is going to work, the U.S. digital dollar. And so we're going to go through all of that. We're going to actually show the proposals, legislation, and everything. And I've highlighted all kinds of different things to show you maybe what's not so exciting and what is not, doom and gloom sort of thing. So we're going to go through that this Thursday for Wine and Wealth. So hopefully you enjoy that. Wine and Wealth is a class that we do for clients. It is Thursdays at 8 p.m. Eastern time. And so we'll be diving into that, and hopefully that's something you guys will enjoy. All right, let's talk about the stock markets here. Going on over. Ta-da! There you go. The S&P hovering near these highs here. What's doing it? Is it tech? Not really. Right? Is it semiconductors? Not today, really. It's everything else. Money shifting away from that and shifting into other areas to help fuel this rally in the market. So if you look over here on the right-hand side of the chart, basically, you've got known resistance, an area where the market knows there was some aggressive selling before, but it's refusing to back down from it. So it's walked up against this big guy in the room and says, I'm not backing down this time. I'm going to bust above, or at least try to bust above. Year to date, the S&P is in second place. It's up over 8%. Now, more than half of the 8% gains have come in the last 30 days. So the S&P in the last 30 days has become the area that people want to go to. All but three sectors are positive year to date due to a little rotation, actually. Very slight rotation. Let's talk about it. Let's dive into it here. All right, so there we go. Make sure you can see that there. All right, so if we look at every sector relative to how it's performing against the S&P. I even highlighted a little bit. The areas that are weak, financials outperforming itself in the last week or so. Energy outperforming itself. Materials and industrials outperforming just ever so slightly. The things that had been performing, tech starting to give you some of the weakness there, right? Communication services, a little bit of weakness, and so money coming into other lesser popular areas of the market. That's the first sign of sector rotation, just a blip on the screen at the moment. But let's go through a few other things while we're here so we can see as well. How else can we look at this? Oh, I saved it. If we compare the performance of the last week to the performance year to date, and then I tried to color code here to show you this a little bit. Let's start with this, make this real simple. So materials only makes up 3% of the market. So we know that if materials just blasts off and has a 10% run, it's not really going to move the market. But over the last week, we have a 2.3% return. The S&P, 1%, which is why on the previous slide, if we look at materials, it shows that it's outperforming the S&P. So we're putting the pieces together here. Now, compare that to the year-to-date performance. It is not one of the top performers. What was the top performers? Down here, we got communication services, technology, and I'll squeeze in third place there, consumer discretionary. So, in other words, these are blue, and year-to-date, it's not blue. Over here, down at the bottom, tech and information technology is not blue, but year-to-date it is. So it's not a leader in the last week, but it has been a leader year-to-date. Maybe a little exhaustion, taking a little bit of a break, whatever. Materials and energy, there's your excitement. Industrials, financials, just like we pointed out on the last slide there. Those are your leaders, but they haven't been the leaders over so far this year. Rotation, right? Ta-da, sector rotation. So that's what you have going on there. You can also take it further. I had the data for everything, so we just pulled it together there. Industry-wise, so remember, we do the stock market. We always look at the broad index. How are things going there? If you're interested, we go further into the sectors inside of the market there to see how things are going. And then for those of you that really want to geek out, we go into the industrials, and we see the same thing. So we see all that excitement going on there too. We have consumer durables, capital goods, materials, and energy. All of these categories, just look right in here. These industrials over the last week are the outperformers. I'm sorry, these industries are the outperformers. However, year to date, they have not been. Tech has been the outperformer. Cars, believe it or not, and parts. Media, that would be communication services, stocks that are within inside that sector and industry. Coming down to software and services, tech again. Those are your exciting areas. Where do they land? Towards the bottom of the list. So the outperformers were the underperformers year to date. The underperformers, over the last week, come from the outperformers year to date. Rotation, right? Meaning money's not chasing the strong stuff anymore. It's chasing the discounted stuff, the weaker stuff there. So really, really clearly, we can see that we have money shifting into other areas of the market that are sort of pulling up the slack. That's kind of a way to say it there, pulling up the slack there. Now, sectors. Okay, week over week, you could see that same exact change there. If I go to technology, there we go. Technology remains overbought. However, technology hasn't done anything. We compare that to something like industrials. There we go. Over the last week, we have action, right? That's another way to see is look at the chart. So you go, well, here's my leader. The tech sector is my leader, but it didn't do anything over the last 5 days. That must mean people that were buying went somewhere else to buy. And this is dragging behind. There we go. They went over here to industrials. Oh, well, that's interesting. Where else did they go? They went over to energy, right? Besides today, last 5 days. There you go. Where else did they go? Oh, let's go over here to basic materials. Aha! The last 5 days, the actions moved over there. The volume has shifted over there. The purchasing dollars, the bulls, whatever you want to say, have moved over into that aspect of the world. That, to me, is really cool to be able to spot and to spot in real time. Now, the NASDAQ so far is the clear leader year to date. It's knocking on 20% gains year to date. It's doing the opposite, though. So look over here. In the last 30 days, you only have about 4% of gains in the NASDAQ. Wait a minute. It's up about 20% year to date, but in the last 30 days, only 4%, whereas the S&P is up 8% year to date, and over half of those gains have come in the first 30 days. So what's that tell you? Money is now, it's very clear to see it's coming out of the tech-driven NASDAQ area. It's coming out of the communication services area. It's shifting into the boring S&P materials, industrials, and financials, and that's how that rotation's happening there. Really cool to see that, which has caused the NASDAQ not to pull back, but to relax a little bit, take a break. There's no extra buyers. Nobody's willing to sell. So it's not panic, doom and gloom or anything. Just taking a break, okay? Also, if you're looking to invest in the stock market, remember, it's not going to blast off. You're not going to miss a rocket ship rally in the stock market. It's just not going to happen. And we can prove it. It's not, remember, my opinion is worth whatever the next guy on YouTube or wherever wants to post a video. the market's not going to rally, and we can use the flows of dollars. It's a weekly report that we get there. We can called fund flows, weekly mutual fund flows. We can use that to actually identify the fact that the market's not going to blast off. There's just not enough oomph. There's not enough sort of money, really, going through there. Best case scenario is a choppy trending market. Okay, it could continue to trend higher. That's fine. You're just not going to have a rocket ship back to highs because there's not enough money in the stock market. Where's all the money going? It's a little bit geeky way of looking at it. In the market here, we look at fund flows, meaning money flowing in and out of mutual funds. Sort of a more advanced geeky way to look at things. The numbers are in billions here, but look, we've got all stock-based funds. Growth stock funds, international stock funds. In other words, no bonds, no alternatives, nothing like that. So if we look year to date, $40 billion has come out of all those funds. Went a step further and said, where'd it come from? U.S. equity. Almost all of it has come out of U.S. equity funds. Where'd it go? People just selling and going and buying fancy things, and apparently Louis Vuitton stuff. That guy's killing it. But no, money's not going there. Where's it going? It's going into the bond market. Bond funds, higher yielding investments with hopefully lower volatility. $13.5 billion year to date. And usually it's coming in the form of treasuries, U.S. government treasuries, and regular old taxable bonds, corporate bonds, things like that. Money market. $647 billion year to date into money market funds. Well, because it's paying you 4%, 5%. Well, sir, why would I take risk in the market when I can go get my 4 or 5% there? And didn't you just say last week that inflation about 5%? Oh my God. So it doesn't cost me anything to save and be safe with some of the money that I want to be safe with? Of course, you're not wrong thinking that. Everybody's thinking that, and we can identify that. So $647 billion, we got $40 billion coming out of the stock market, and you say, well, we need this to blast off and go to new highs. It's not going to do it. There's not enough money. We can't have that happen. We do not have enough dollars at this moment to blast off the market. That could change, but for the moment, we do not have that. You want to know the really cool part? If you have a 401k, 457, 403b, maybe a simple plan at work or something, and you're investing in various mutual funds, you're probably pretty happy. You compared your performance to the market lately. 29% of all large cap growth funds are beating the S&P. That's not a record, but it's very close. 37% of all large cap values are beating. 1 in 3 funds essentially are beating their benchmarks right now. I found that rather fascinating there. Why is that? I thought that was not supposed to be possible. You can't do that. Why? It's not something, you can't beat the S&P. That's crazy. It's because stocks themselves, the underlying stocks that are owned by mutual funds, are nowhere near correlated to the stock market. So historically, what you can do is you can say, plot the performance of, pick something. I don't want to say IBM, but that's the only symbol coming to mind. Plot Walmart against the market. So Walmart's performance won't be percent for percent, but the correlation, the chart, will be correlated pretty closely. When the market goes up, Walmart's going up. When the market goes down, Walmart's going down. There's often a correlation, a very high correlation, by the way. What's happening now? There's next to no correlation, and here's to show this relative to the history, and this is off the beaten path, so we're going to pull that up here so we can see. Excuse me. So in the dark blue, we have the average stock correlation in the S&P, a third, meaning for every one the market goes up, a stock will either go up a third or some other variant besides that. It essentially is not participating with the market one for one. It's not normal that they do as a whole. As you can see, we're usually hovering around that 50%, or we have been hovering around that 50% level, which has caused the market to uniformly move higher with the stocks you have. When that happens, it's very difficult for an individual fund to show any kind of outperformance, whether it's positive or negative. However, right now, stocks are just moving in their own world. They've got a mind of their own, just flip-flopping around, doing whatever they want. And because of that, you have a recipe for funds, in particular tech funds, large cap growth funds, that can easily beat the market because those stocks are moving on their own. They're doing all the heavy lifting for the market. So really, really cool, and just something to bounce around and talk about. Maybe catch that if you happen to be looking. Okay, oil taking a little bit of a break here, a little pullback off the 200-day moving average. Not bad there. You've got interest rates rising, unfortunately, giving back all of those sort of losses from last week where yields started falling and they said, nope, right back where they started. So people that are looking to buy things or spend money on credit, unfortunately, it's going to cost you a lot, especially those credit cards. Get rid of them stinking things. What else do we have here? I think that's about it for the initial stuff I want to cover. Remember, this week, Wine and Wealth, we're going to be talking about the FedNow processing system there, how that all works. And then we're going to talk through the digital dollar that unfortunately is making its way, like it or not. So we're going to talk about how that works and how that'll all be integrated and, you know, the catchphrases and all the legislation. I read through the entire thing. So we'll look at some of the things that are a little odd, some of the things that make perfect sense, and see if we can't find a way to get excited about it. I don't know. I'm not sure everybody's on board with that. Okay, let's do some stocks in the news here. Apple's in the news there because GM says we're not interested in the data that Apple is collecting by using Apple CarPlay in our cars. Oh, we don't like that. And plus, they want to just do this themselves. They're spending so much money on development. Their sort of coding and computer programming department, holy cow, they are spending literally billions of dollars and exponentially more to conquer all this themselves. It didn't really affect Apple there. They're not really too concerned. Apple probably have their own car before long. Disney, the fight continues here in Florida with the governor to go against Disney and make them, it's just payback for the don't say gay thing. That's really all it is. It's a fighting thing there because Disney supported that. And then the governor was like, you suck. And then Disney was like, no, you suck. And they said, well, you're in our state, so we're going to tax you more. A bit back and forth. He even joked about building a jail in a offbeat way, but that's probably what the media picked up on there. Build a jail next to Disney World. See how they like that. That's a tough one. So that's not subsiding. It didn't really affect anything today, though. Taiwan Semiconductor says we're not going to invest in ourselves as much. It's just too expensive there. It's bringing their so they were going to spend about $30 billion. They just said they're going to shave about $2 billion off, use that cash for something else. That's good news for the stock. It was up about 1% for the day. A lot of the banking stocks are reporting. State Street, missed on earnings, missed on revenues there. They are going to do some buybacks. However, they lost 10% of their assets under management. So the investments and things that they do for people. We were expecting to see $8 billion more come into the coffers, and instead $26 billion went out. That is the bulk. That's all you really need to know about their earnings. That's bad news for them. They've got a lot of work to do to get that money back. And then you got Alphabet basically saying, Alphabet getting the news from Samsung that was saying we may just switch to Bing in our search engines there. We may not use Alphabet anymore. I don't know where they're at on that. I didn't really look into it. And if you like the cars, and flying cars, by the way, XPeng. So the ticker symbol is not XPeng, it's XPEV. But these guys are one of the competitors for the cars, and I think the flying car is the coolest thing ever. So they actually have that. It flies. It works. They have a full working model. It's really cool if you look it up online. That's interesting to me. However, cost cutting is their big focus here. Now that they're in a position, they say, to be more competitive, well, now they want to keep their costs down to be more competitive. Obviously, shareholders are going to like that. That's one of the biggest boosts that stock has had in a while there. If you want to hang out later with me, Jazz After Dark, tonight we're going to talk about a little-known government program that takes money out of your Social Security to pay for student loans. And it is about to get fired back up again, so we're going to talk about that so that you don't get in trouble there, because there's nothing you can do about that. So, bit of a devastating story coming there. Last week, we talked about how to invest like a pro by tracking your stats instead of trying to come up with a strategy. Money management is the key in this world, especially in this market there. And, of course, all kinds of other cool things there. I'll attempt to answer your questions by pulling this thing over here. And let's see if there are any questions that I can help you with and go from there. Alice Walton and her two brothers sell a seemingly unlimited amount of shares. You want to feel bad about the value of $1? Just go look and see how much they sell. Just search it on wherever you want. It's, that is big money. ETF follows the trades of elected officials, maybe one for the House, one for the Senate. There's not an ETF, but there are groups that automatically do that, and they build portfolios wrapped around that you follow. You can't buy them directly, but that was a thing for a while. Yeah, I find that fascinating. That we're all okay with that. You know, oh, there's a national disaster. We could somehow ready $1,200 per U.S. individual and crank that thing out in a week and get it done. But we can't pass a simple thing that says, hey, you guys stop trading. You have inside information. Stop it. Oh, no, we have a whole process for that. I don't like that. Probably missed a few there. What's your opinion on adding applied materials with the news from ASML and Taiwan Semiconductors? Well, we talked about Taiwan Semiconductors and them saying it's not worth it for us to just go ahead and invest in ourselves. However, how do you not like a viable pullback in semiconductors? How do you just assume that's it? I don't think you do. Now, AMAT's a little weaker than the rest, FYI. I'm not certain that that's the one I would pick, but I like the idea of a pullback in semiconductors. The Walton family, they don't have unlimited shares. No, it just seems like that. But they sell every now and then I'll get that question. Somebody says, oh no, they're selling. They know something. I'm like, nah, go back and look at the history. They just do that. Hundreds and hundreds of millions of dollars, multiple times a month. Money. I've done that in the past where I shared how much we did a chart to show how much did she sell over the last 30 days, billions of dollars. I mean, fascinating. Can you help me understand how the digital dollar will function? I'm going to do that on Thursday. I don't have everything in front of me. I had basically took the entire legislation. We broke down the process, how everything's going to work. And of course, Fed Now, which will be the first thing that comes out. I think later this month, actually. That's going to be first, though. Yeah. The capital gains home sale rule is based on whose name is on the title or how you file taxes. Bought a house when I was single. Now you're married. Taxes filed jointly. It's your house still. Yeah, but you're joint, right? So you guys will take the full $500,000. Yeah. What's a good reputable term life insurance company? It depends on how much you're looking for. New York Life is on the higher end, price-wise, a little easier to communicate with. MetLife is a good one, too. Just from experience, I don't know much else about the company, but from hearing clients back and forth with them. And you don't have to worry so much about, like, State Farm's tricky. I'm not against this. It's just most people don't need it. But you may go look for term life insurance through State Farm and end up with a whole life insurance policy or something different. That's a little... You know, there'll be a little pitch there to try to get you to do that. Not saying it's not right for you, but for most people, it's not. Yeah. Why would they sell and pay the capital gains? Isn't that what the rich are not supposed to do? Oh, but they don't sell and pay capital gains, AJ. That is the trick. So there is a whole different world of accounting that goes into that. So they pay tax on the income that they pay themselves from their charitable trusts. But that is a drop in the bucket compared to the money that they bring in. Good old-fashioned tax strategy there. State Street, you did miss the fact that they have 10 billion less in AUM, or 10% less in AUM. That's a tough one for them. Yep. Good question. I missed the question from Kaylin, apparently. I'm sorry. Do you ever have a chance to look at the strength of this rally if the Russell is underperforming? I did not. No, you got me on that one. So let me make sure I still have it, actually. Should be in my tab. I switched away from Google Chrome this weekend, by the way. I spent a lot of time on that, getting everything navigated over. It's just slows everything down, man. It is a memory hog. But yes, I do still have it there. Make sure I don't forget that one, because I'm going to get rid of that. There we go. AAA has term life. Yeah, but you're going to pay just a touch more. It sounds like you'd get a discount there, but they're not the ones offering it. So it would be term life through a provider. So it might just cost you a touch more on that one. Will be the catalyst for fund flows going back into the stock market, earnings or rate cuts? A discount in the market, meaning its valuation relative to a 10-year average or something. It's about even right now. So any severe discount there that would talk people into taking more risk. A lack of a recession. Therefore, people don't need the safety money that they're protecting at the moment, and they maybe feel a little bit more gung-ho about investing it in the market. It is definitely not a one-day thing, so you will not miss that. Is the Fed still getting what they want? Do you think a 25? I would say yes and yes, Manuel. Apple doing the high-yield savings account. It's okay. I mean, they've talked about this for 2 or 3 years now and shopped around from different providers and stuff. It's okay. Some people, it's just a normal progression. They have an iPhone. They like working with them. They'll use it. You know, it's competitive out there, so there are better rates than what they are starting off with, but they are trying to be competitive. Remember, Apple's a services company, so they need the services. They don't need billions of people to use the services. They just need a tiny piece of their entire user base. Because remember, they don't pay the App Store fee. Is that legal or is that not legal? That has been decided already. So, doesn't matter what you think. Okay, I'm going to wrap it up there and get ready for our class here tonight. And you guys enjoy the rest of your evening. Thanks so much for hanging out with me. And all is good. Yeah. We'll see you later. Adios.